Good afternoon, everyone. My name is Begum Ashwabo. I work as an analyst at the Center for Risk Analysis. I am joined by my colleagues, Sharon from Black, who's the head of marketing, David Ansara, who's the chief operating officer, as well as Frans Cronje, who is the director at the center. And we welcome you to a webinar titled South Africa Economic Outlook, where me and Frans worked on this briefing, where we looked at the trends, domestic and global trends that will define South Africa in the year 2021, next year, as well as the years after that. We also provide our call on the fiscal deficit, government debt, as well as employment numbers. The order of things is as such. Frans will handle majority of the briefing, and then we will have a Q&A session, which I will facilitate. You're more than welcome to post your questions in the Q&A section, which you'll see at the bottom of your screen as Frans goes forward with the presentation. And as well as we transition to the Q&A, you'll also be allowed to ask directly a question to Frans or me using a mic. You just simply have to raise your hand and allow you to speak. We have also organized polling questions, which will be asked in the Q&A session. Without further ado, I now hand over to Frans Cronje that will handle this briefing. Thank you, Frans.
Becky, thank you very much. Good afternoon to all our guests, and thank you for joining us. As the year draws to a close, we put the Brains Trust together in the center, and we produced a view on what we expect from the South African economy next year, and then also into around 2023. I'll take you through our ideas there. That'll take about half an hour, and then we should have in the region of half an hour for questions. Should be following me on my screen. What you are seeing on that screen is the 7 areas that I'm going to talk you through in the next half an hour. We'll start with the growth outlook for South Africa, then the deficit, the debt outlook, what's going to happen with jobs and employment. From there, we'll take a punt on the currency. We'll give you our sense on the South African equity outlook, and we'll end with the major risks and take your questions. Let's get underway. Economic growth outlook for South Africa. I'll show you the substantiating charts in a minute, but the overhead view from us is what you see on your screens. Electricity shortages, they're going to remain in play. Threats to property rights, corruption. We don't buy the thesis that there is a deep and sustained drive to root out malfeasance. There's still a deeper version to reform. Those factors are going to combine into a best case. We think that we'll see South Africa into the medium term averaging growth rates of about a third of emerging market norms. Now, emerging markets are going to grow at around 5% on the 3-year view. On average, we'll be probably in as a best case. So you'll see the minister agrees with us, about 1.5% of that. But significant downside risk to South Africa. We'll draw that out through the next half an hour. Should global circumstances turn against us, or should the government proceed with some of its more populist policies? How do we justify that call? Well, what you're looking at here is the South African economy from 1960 into the present. The red bars are economic growth in South Africa. That's not the main feature, though, of this chart for us, for our purposes this afternoon. What I want to show you is the black line. It's the lead indicator. It is without doubt the best index of what to anticipate from the South African economy out over the next 18 months. It's compiled by the central bank. It's built out of indicators such as new vehicle sales and factory manager purchasing decisions, all things that give you a sense on where the economy is headed. And if you look at the chart over the relationship between the indicator and growth over the past 6 decades, you'll see something that stands out. Draw your eye to any peak in the growth rate, and those peaks will correspond broadly with peaks in the lead indicator. Any dive in the lead indicator suggests a dive is coming in the South African economic growth outlook. The absolute level of the indicator at any point in time is irrelevant. All that matters is the trajectory of the indicator. And whether you start now pre the financial crisis, where my little laser pointer is there, or post the crisis, the indicator is now on its longest flat to downward pattern since inception. And that virtually guarantees that growth rates in South Africa are going to be trapped at around present lows. This year, of course, an exception, the great contraction, but lows of around 1.5% as the best case. What do we think specifically? Well, on the left of this chart is the CRA's, a GDP growth estimate, and we compare that to Mr. Mbowene's Treasury forecasts. This year, we're coming in at -10. He's at around -8. Next year, the bounce, it's not a recovery. Don't think of that as an economic growth recovery. It's a low base effect of this year. Thereafter, we go back down to sub 1%. The minister's at 1.7%, but bear in mind, Treasury growth forecasts have been off by around 50% over the past decade. So our forecast is in keeping with that. We don't show you 2023, but the minister actually drops his growth forecast further to 1.5% in 2023. And those Treasury forecasts are really instructive. If there was, in fact, a great turnaround on electricity production just on the horizon, if structural reform will indeed be introduced, if there is firm action that's going to be taken against corruption, the Treasury would not be forecasting growth rates this low out over the 3 and into the 4-year view. They know that a lot of that is public relations. They know that a lot that happened at the investment conference last week is public relations. South Africa's growth outlook from them, corroborated from us, corroborated by the Treasury view, anticipate levels of around a third of emerging market norms. From the growth outlook, we go to the budget deficit. The outlook from us is that because the growth projections are a bit unrealistic and because it's going to be very tough to execute spending cuts, the deficit outlook is likely going to be worse than what the government has projected. Also, there's a problem in how the government's thinking around the economy in the short term is coming together. There is an idea in government of introducing austerity and thereby cutting consumption expenditure, and consumption expenditure of households in South Africa is equivalent to 60% of GDP. So we're going to cut expenditure whilst at the same time raising the rate of economic growth. It can't happen. It's an impossible contradiction between the two approaches. And it's a contradiction that's further compounded by thinking that a lot of that growth is going to come out of a great infrastructure program. Infrastructure programs traditionally deepen deficits and the like. You can't narrow the deficit and have an infrastructure program at the same time. We, in any event, don't believe there is an infrastructure program happening. Rather, we think talk of an infrastructure program is a cloak to conceal patronage network financing. What do the numbers on the deficit look like for us? Well, here is government expenditure, that's the black line, as a proportion, or government revenue is the black line. There's a revenue, how much does the government collect in tax and the like, as a share of GDP from 1993 projected into 2023. And the red line is government expenditure to GDP. Now, before you get to the extreme right of the chart, let me draw you back to the left of the chart. It's the era of the dawn of democracy and the first 10 or 15 years thereafter. And a very important thing has happened. Look how the red line, government expenditure levels are reducing, whilst government revenue levels are gently increasing, culminating in those 2 years, 6, 7, 7, 8, in a budget surplus. That is pragmatic macroeconomic management. Thereafter, the position worsens. Now it's worsening to the point of an absurdity. If you look at how the expenditure line is taking off, and then compounding the absurdity, the idea out of the Treasury that expenditure is now going to be significantly reduced, even as revenue collection continues to rise. We just can't make the math on that work in our own heads. That means the deficit outlook has to be the difference between expenditure and revenue that gives you your budget deficit has to be a bit worse than what the Treasury is suggesting. How much worse in the historical context? This is a great, somewhat alarming chart. It runs from 1913 all the way into 2022 or 23, actually. It says 2020. Data goes a bit further. It's the budget deficit. These lighter orange lines are the Treasury's forecast for what it thinks it will achieve on the deficit. The point being that even if the Treasury gets its forecasts right, The deficit is going to remain at levels that we last saw as apartheid was collapsing under the weight of its contradictions at the end of the Cold War. And prior to that, South Africa, in the aftermath of the Second World War, that was influential in prompting the defeat of Smuts in 1948, prior to that, the First World War. The difference this time is the world is not at war. South Africa is not coming out of an era of a minority rule, and yet the deficit position is exceptionally poor. Outlooks from us and Treasury, what do we think is going to happen? Our forecast on the left, Treasury on the right of the chart. This year we're further south than the Treasury. That remains the case into next year, and it remains the case into the 3-year view from us. Why? We don't think they can meet their expenditure reduction targets. We don't think they can meet their growth targets. Reflecting on this stuff again this morning, talking to Becky, how am I feeling about even our own forecasts? There's a sense in the mind that even our outlook might turn out to be a little bit too optimistic. Turn from the deficit to the debt position, and what happens here is obvious. Because our growth outlook is down, expenditure cuts can't happen. We think the debt projections are unrealistic. Politically, expenditure cuts of the extent that are needed are just not going to be a politically survivable event for the ANC. It's going to drive terrible factionalism. Lots of people are going to lose their jobs as a consequence. Look at this climb back on SAA. Look at the events around the SABC last week and how quickly job cuts in the SABC developed into a populist political platform for Mr. Ramaphosa, Mr. Mbeki, and Mbowene's critics to attack him. It will happen every time expenditure cuts are implemented in the civil service. It's not going to work politically. Therefore, hence, we expect the government to issue more debt and move on the prescription of assets, even though they might not use the word prescription anymore. And an emerging risk here is this is going to start, particularly if the debt issuance and the prescribed assets start to, it emerges, as it will, that much of that financing is being used to sustain a corrupt patronage networks. The reputational risk to the financial institutions involved is going to be very grave. The charts, what do they tell us? Well, 1994 projected into 2023-24. It's really the story of South Africa, isn't it? Debt levels inherited around 50% from the nationalist government. Mbeki, Manuel, Mandela, they bring that right down by half, 48% down to 27%. Thereafter, the escalation, and now the alarming escalation into the era of Mr. Ramaphosa. The numbers from us, well, that's the outlook for this year into next year, and we see debt to GDP for South Africa breaking through the 100% mark sooner than Mr. Mboweni sees it breaking through that mark. What does this all mean for jobs, the employment outlook? Well, we do anticipate some recovery in jobs numbers. Now, 2 million jobs were lost as a consequence of the lockdown. 500,000 of those were already recovered into the third quarter. We think some recovery will persist, but not to the extent to get jobs numbers back to the levels of the first quarter of this year. Completely inadequate, the growth outlook, to get our labor market absorption rate up to emerging market, or in fact developed economy norms. Here are the charts on that. It's 94 projected into 2022. The projections this time are Beki's. What you're looking at is the number of people with a job in South Africa. The overhead point is it started at 8 million. It got to earlier this year just about 16 million. So jobless growth under the ANC is it's not true at all. In fact, it's a bit of a myth about South Africa. 2 million jobs lost into the lockdown. 500,000 of those have come back now. On our growth outlook, we see jobs numbers coming back slowly into 2022. They'll still be far below the levels of the first quarter of this year. And in fact, if you go back in time, jobs numbers on the 3-year view from us will be essentially equivalent to what South Africa had more than a decade ago in 2008. And the political pressures of that, the consequences for dampening consumption, expenditure, etc. If you attend many of our briefings, you know where we think this goes politically. It's quite a thing to consider. If you talk about a lost decade in South Africa, draw those two jobs lines, compare those two jobs numbers, 2022 or now to 2008, the lost decade is very evident. On top of this, what Beki's done for us is put in the economic growth rate for South Africa, just to make the point that this relatively buoyant era where growth averaged 4% and then went up to 5%, that's really from the end of the Asian crisis to 2007-8, saw a relatively steep uptick in jobs numbers in South Africa. As growth turns downwards, of course, the opposite begins to happen, and hence our jobs forecast coming out of our growth forecast. Point to make too on the jobs position is that even before the lockdown and great economic reversal that it brought about, South Africa was, from a labor market perspective, in a pretty poor position. What you're looking at here is first quarter 2020 data for a cross-section of countries. There's South Africa, second from the right. And what we're measuring is the labor market absorption rate. What that tells you is what proportion of people of working age have a job. Now, the norms sit at around 70%, sometimes a bit below that, South Korea, sometimes quite far above that, such as in Japan. Going into the lockdown, South Africa's figure was very low at 42%. Second quarter dropped even further. It was starting to flirt with half the levels of some other economies. It's come back a bit into the third quarter, but with the present medium-term growth outlook, no chance that South Africa can aspire to emerging market, labor market absorption norms. Political consequences of that are going to be quite something. From jobs to the currency, what do we think is going to happen here? Here our analysis becomes interesting and slightly more complex, because there is a three-part case to be made that despite everything you've heard to this point, the rand can hold its current levels or in fact strengthen further into, and critically here, into the short term. That's a 12-month view. Those three reasons are: one, risk on sentiment. Should the global recovery persist, will reduce demand for dollars, and as a consequence, the dollar itself, the safe haven of the dollar, is no longer as in demand as it would have been during the crisis of March and April, the pandemic crisis. The dollar weakens as a consequence, and that will lend some support to the rand. Continued global recovery, the second point, plus a Western government infrastructure approach as its next phase of stimulus, will support commodity prices, which are a traditional driver of rand strength. That holds the rand up further. And third, you know what that is? That's the yield question. Interest rates around the world remain low, certainly into the short term, perhaps into the medium term. That means South Africa remains a rare outpost of yield, which will shore up the rand. Now, critical risk here is that despite that and the likely outlook for a little bit more rand strength, none of it is because of South Africa's own fundamentals. And hence, into the medium or longer term, our call as a team of analysts is for the currency to weaken further. So a bit of a roller coaster expected on the currency. What do the data charts show us that we draw this view out of? Well, it's December of 2019 is where this chart starts, into a couple of days ago. That is the US dollar index. It's an index of the strength of the dollar. If it rises, the dollar gets stronger. If it weakens, if it falls, the dollar is getting weaker. There's less demand for dollars. It's a typical indicator of risk on sentiment. Look how the dollar strengthened sharply into the crisis of the pandemic, and how, as that began to ease, the global economy began to recover, how the dollar weakened sharply and continues on a gentle weakening track. Over that, the iron ore price, just as one commodity indicator, again, it's the risk on effect, and you see the price pick up from its March, April lows. It's now way above levels even of January of this year. Both collective, it's a double whammy effect for rand strength. That's why you've seen the currency strengthen so much over the past month or so. The yield differential is this next chart. It's 1994 January out into a couple of days ago. And what we're measuring here is the difference in interest rates between 10-year bonds in America, a safe haven of by reputation, and those in South Africa. And that differential is how much more do you pay in South Africa than you would pay in the US. Look how that differential reduced after 94 as the South African democratic experiment became quite successful. The risk premium on South Africa reduced as a consequence. The economy was recovering. The yield differential is a measure of risk. It rose a bit into the financial crisis in the era of Mr. Zuma. Now it's escalating particularly quickly, and that will continue to drive some demand for rands in the yield-free world, shore up the currency a little bit further. But into the medium and longer term, the position changes. What we've done in this chart, it starts in July of 2016 and it goes through into the present. And we've compared the rand to the Argentine peso. And this is the result. That is the rand's performance since July of 2016. It starts there at around, I think it's just on 14.15. It's relatively flat on this scale. You'll see the peso now. Then weakens into about 3-4 months ago quite sharply, almost touches 20, comes back a little bit now as risk on sentiment plays out across the world. The dollar weakens. Argentine peso, it was in the same place as the rand just 2 to 3 years ago. And then it all goes hopelessly wrong. Now, the comparison between Argentina and South Africa on technical grounds differs. They had greater exposure to foreign debt. They were particularly exposed to when interest rates into late 2017, 2018 lifted somewhat in the United States. All those differences apply and are important. However, the bigger picture of a country living fundamentally beyond its means and being then exposed to external global shocks is something South Africa has in common with Argentina. And it's not outside the realm of possibility to consider that should global circumstances turn on South Africa now, while the risk premium in the country deepens quickly, let's say there's firm action on expropriation or something, that the currency could not go through the dramatic type of devaluation that you see in the Argentine peso. Look at that, 15 to 70 to 80. It happened in a question of 3 years. It's not off the charts for South Africa. We think it's important to flag that risk for you. From the currency to the equity outlook, yeah, if the global economy's recovery holds up, the public availability of the vaccine next year will help that. The sort of normality reduced the world by the liberal internationalism of Biden's administration in America may do that as well. The stimulus will continue in the West. China's clamping down on political instability around Hong Kong. All of these drivers of global stability. That recovery persists, risk on outlook stays, that should lift the South African equities market into the short term, at least. But domestic earnings, firms on that market that earn in South Africa, continue to face an extraordinary number of headwinds, and these will persist through the medium term. The outlook, therefore, from us is that you can actually look back here to look forward, to understand what you're likely to anticipate, what you could see coming out of the South African stock market. The chart runs from January of 2009 into a couple of months ago. And what Beki did is he said, if you invested $100 in the S&P 500 in January of 2009, what would you have now? And you've got about 350. In the MSCI World Index, but in the FTSE, in the ALSI here, you have done somewhat worse. The Dow 30 Industrials, you've done somewhat better. That relative underperformance over time is what we anticipate from the South African market, given the headwinds that the South African economy will continue to face. Into the short term, though, that might not apply. And the reason is manifold. I've suggested some of them. The risk on stuff's important. And look at one example of that. It's the data runs from December of 2010 into the very near present. And it's a US dollar index, that same index, the strength or weakness of the American dollar, plotted across the all-share index in South Africa. Now, initially in the chart, you don't see the relationship that I'm going to show you now, because this is still the era of the post-financial crisis recovery, and the Aussies making up all that ground that's been lost in conjunction with stock markets around the world. But thereafter, once it gets back to a sort of even keel, as the dollar strengthens, look at the dollar index rising, you see the commensurate fall off in the all-share index. As the dollar weakens again, there you see the lift in the all-share index. And the pattern, as far as we go, repeats itself over and over again. The extremes start becoming more apparent as you go later into the chart. And what little lift you've seen in the Aussie of late, part a function of what you see in the weakening dollar there. So if you can make a call on the dollar, probably make a fairly calculated call on the Aussie. I have to tell you, we don't offer investment advice. Don't take it as that. Go and talk to your broker if you want to make a decision based on this stuff. We're just strategic intelligence analysts showing you how the charts and the like stack up to each other. But again, the outlook in short term for equities here, but better than it's been. But in the long term, it's not great at all. And that's a theme of this briefing. Short term for South Africa, you might see the currency come back a bit. You might see the stock market do a bit. You might see a little bit of complacency develop around the place. The idea takes hold. Maybe the reform movement is getting a bit of traction. It's very dangerous and very misleading because the fundamentals to support it are not in place. And South Africa could be setting itself up for some pretty dramatic reversals. Stay with this chart. It's the same chart that you're seeing here, but it's not a 10-year view. It's actually the view since December of last year. There is the dollar index as it weakens in the aftermath of the COVID crisis. There's the all-share performance, and I mean the relationships between the two are very apparent. Close view, what do we think the big risk position now is on the economic outlook for South Africa? We distill it to one big thing, but it's made up of components. And our view is this: through the short term, it is possible that great sort of global political normalization, the vaccine availability, global recovery that might draw strength from both events may buoy optimism, wave of risk on sentiment, sees the dollar weaken, commodity prices strengthen, that buoys emerging markets, economies, their markets and currencies, including the rand. However, for South Africa, through the medium term, 12 to 36 months, given the weak fundamentals, our expectation is for the economy to average only a third of emerging market growth figures, the currency to weaken further, markets to underperform their peers. And on top of that, should global circumstances turn, foreign interest rates rise, for example, which might see a great stampede out of the rand into the dollar, given that the yield equation won't be so favorable anymore. Just one example of the kinds of risks we face. South Africa is terribly exposed and is at risk of suffering spectacular economic and currency reversals. That's it from me for the briefing part of this afternoon. I hand this back to Becky, who will take us into the questions and close off the afternoon. Thank you very much for having a listen to what we've had to say this afternoon.
Thank you so much, Frans, for that extremely insightful briefing. I believe my key takeaway is that we may actually see the rand maintain its current levels and perhaps even strengthen further due to commodity price hikes. Just a reminder to the audience that if you'd like to ask us a question, you have a variety of options open to you. You can post your questions in the Q&A section, or if you want to directly ask a question to Frans, you just simply raise your hand and I will allow you to speak. As everyone is gathering their questions, I would like to quickly just post a polling question. And the polling question goes as such: do you believe the Treasury's midterm growth, debt, and deficit projections are credible? First option is yes. Second option is no. Third option is maybe. And I see that majority of which people are starting to say no.
Gee, Becky.
Yeah, quite a fantastic site to actually see here. I believe, France, we may have actually convinced our clients that treasury figures tend to
Look,
be incorrect by a margin of
look,
50%.
over the past decade, they have been.
Yeah.
They've been off by about 50%. I think that's going to remain the case. And then there's, of course, the risk of this great reversal coming as well. But, my advice to clients always be terribly skeptical of analysts. And we encourage our clients to be skeptical of our own analyses as well. Test, try to convince yourself that we're wrong. Try really hard. If you succeed, we don't mind. It's not a bad thing. But whether it's Treasury forecast, CRA forecast, be skeptical of analysts, come to your own conclusions. But I'm pretty confident that what we've got here is solid and it's going to play out as a best case in the way that we've projected it. Other questions looking, Becky?
So far, people are still posting questions. I just want to state the results of the polling question. 4% say yes, 84% say no, and 12% say maybe. Frans, I just have a quick question for you as everyone's posting their questions here. What is the significance of government expenditure reaching close to 50% of GDP by the end of this financial year?
Yeah, well, it all depends on well, I mean, as a share of GDP, it's exceptionally high. And it's the significance is it's exceptionally high in an economy where the growth outlook is exceptionally poor and the policy environment is hostile to seeing that growth outlook rise. What that means is that in practice, the South African government begins to run out of money. And the great question, I'm sure we'll get it, but I'll just get into it now, is what does it do at that point? Its options are to reform, but there's a great ideological aversion to reform within the government, the cabinet, and the ANC. So I don't think we're going to see, despite the pressure of the deficit and low growth, the political fallout, I don't think we're going to see a firm move towards structural reform. The ideological aversion is too strong. The second option could be to cut expenditure. Now, in principle, where it's wasteful expenditure, perhaps, but cutting expenditure in order to get growth up it doesn't hang together, it doesn't work. It's a fundamental contradiction, particularly when your growth problem is a function of bad policy. So drives to austerity we've been critical of in the main, particularly where people lose their jobs, rather grow the economy to the extent that it can afford its civil service, etc. In any event, austerity politically won't happen because at each theater where austerity is introduced, the SABC is the model that you're going to see play out time and time again. A move is made towards cutting jobs. The staff rebel. They win massive political support, including from the ANC itself, who sent a number of people to support the staff. They use the austerity platform at the SABC to attack Mr. Mboweni and Mr. Ramaphosa. Doesn't get off the ground. So you're not going to get reform. You're not going to get austerity. So what's left? Through the medium term, I think there'll be more debt issued. We'll just go deeper into debt and kick this can down the road for future generations to face the consequences. And you will see a real attempt to pivot the cadre deployment and networks and the patronage networks away from dependency on public funds, taxpayer funds, towards exploiting the vast pools of cash that exist in the savings of South Africans. So whether you call it prescribed assets or not, whether it's voluntary or not, in practice it's not, you'll see a move towards that, I think. It will all be dressed up as infrastructure expenditure in the pursuit of higher levels of growth, to cloak it in what I think is an undeserved a measure of credibility. In practice, it's simply a way to sustain the cash flow that keeps the cadre deployment networks moving. Once you've exhausted those funds, I think South Africa moves to some money printing, given the inclinations of its present leadership and the weak standing of what reform-minded leaders there are, not just in the ANC and the government, but also in the Reserve Bank. From there on out, you say, well, why don't we borrow from the rest of the world? Take bailout financing. And the reason why that is off the table for the time being, even Mr. Mboweni's rejected it loudly now, is that there'll be conditions attached to those loans. And the conditions will be that you have to deal with corruption, you have to introduce structural reform. That's not going to be acceptable. So the foreign bailout financing is still very far down the line. I think it's debt issuance and prescription that could kick the can down the road for a couple of years. But the consequences later, particularly where it goes into money printing, high inflation, pretty devastating for the South African economy. Becky.
Yeah, and that question of reform lines quite well with Sarah's question here, in which she states, after investment conference, the EU, Finch and Moody's downgraded our investment desirability. Will anything other than being voted out of power cause the ANC to make proper structural reforms?
Well, look, the question is structural reform. That's the question. And why is there not reform? Go back to what we've just said. The reason is the ideological balance is wrong for it. It's quite an easy exercise to predict reform in an economy. You look at where the ideological balance or policy thinking balance of power lies in the cabinet or the ruling party. Can pretty well judge from that. Now, there's a great dearth of the reform-minded thinkers in the South African government. They're very few. I mean, we count them on one hand, if that, a couple of fingers, real reform-minded thinkers in the government. So, yeah, the economic whole does not, in South Africa's case, necessarily prompt reform. Into the longer term, perhaps the 2024 election, you attended some of the briefings with that before. If you haven't, get on a call with us. We'll show you some of the numbers. I think the ANC is looking a bit politically weak. And if you want a firm inflection point from which South Africa might eventually move to full-scale reform, probably is going to be an event in the ballot box. Might be one that pushes the ANC majority down to below 50%. Becky, back to you.
We have a question from JW, and it goes as follows. Will we see an Argentina or Venezuela? Which country is South Africa likely to follow? Will the media and SJW sort only be woken up when we become a totally failed state?
Look, I mean, the fact that these comparisons are even in play is the significant thing. We're not yet at the point of a default on our debt, because unlike others that got into deep trouble, we don't have mass amounts of foreign debt. So weakening currency doesn't affect us entirely the same way. We've still got sufficient reserves to cover any obligations we might have there, probably into the medium term. And we've got this vast pool of capital to tap within South Africa before you have to resort to really dramatic borrowing or the printing of money. So the sort of defaults that trigger those kinds of crises for us might still be a few years away in the longer run. Will it be Venezuela? Will it be an example of what was the other one, Becky? Venezuela or
Argentina?
Argentina, of course.
Argentina.
I used Argentina. Will it be Venezuela, Argentina? We're wary of drawing an explicit parallel, a linear connection between one or another country because their circumstances differ a bit. However, what I'm completely comfortable to do is to tell you that South Africa, like both those countries, is now living very far beyond its means. And it does not have the reform-minded leadership necessary to correct course, either on governance, so corruption questions, or on policy and therefore ideological questions. And therefore it has to be the case that in the fullness of time, out into the medium term and beyond that, South Africa runs the risk of revealing charts and trends that we'd share with our clients, that people would say, you know, there are parallels here to what is happening, what happened in Venezuela. If it becomes particularly nasty, there are parallels to what happened in Argentina. If the politics is somewhat less nasty, less cruel, but less oppressive, but equally ideologically misguided. Argentina, of course, has a long history of defaults and IMF bailouts. We do not have that long history. That's one of the key differences. But your point is we are living very far beyond our means. We have short-term options to sustain that. But in the long term, those options do lead you into default territory. And then, yeah, all your indicators, currency, inflation, and the like, run amok. Becky, back to you.
The The Argentina scenario is similar to James' question here, and he asked, given the Argentina peso scenario materializing in South Africa, and assuming this happens between 2 to 5 years, is there any reason whatsoever to justify any investment in South Africa right now? Is there
Yeah,
any hope
absolutely.
of
Yeah,
investment
it's a
in
good
South
question.
Africa?
It depends where you are and what you do. My experience is that what matters is whether you know what's going on and what's going to happen next. It doesn't matter significantly whether it is a good picture that's emerging, positive one, or whether it's a negative one. If you have a good sense of where the position is moving towards, what it's moving towards, you can take advantage of upsides, you can take advantage of downside. You can short currencies, you can go long on currencies, just as one example. So there's no excuse for a person who is exposed to South Africa to suffer terrible reversals over the next 5 years and to say, well, things happened here that we didn't anticipate or didn't know. You should, as an individual, do relatively well. If, however, the question is more precise and is if you are a business in South Africa, what is your outlook? Then my answer is still qualified. It depends what sector you're in and how dynamic you are and how able you are to limit your exposure to the extreme South African risks. If you work mainly for the state, if you have no offshore exposure, if your exposure is purely in fixed assets here, as opposed to more intellectual property, speculative positions, then your relative risk is pretty significant. But I've got no doubt that there are a number of positions that investors, business people can get into in South Africa now, for out of which they will do very well, even if South Africa moves through a decade of terribly weak economic performance, such as that I've set out for you here, the position we've set out for you here on the 3-year view. Becky.
Frans, with the increase in government expenditure and declining tax revenue, will we see a wealth tax essentially emerging in South Africa, or will we see more expropriation and prescribed assets the like?
Well, ultimately, as we were preparing for you this morning, a colleague actually remarked that in the longer run, once you've exhausted the domestic pool of savings, once you've borrowed to the point where it simply isn't credible anymore, if you still reject foreign bailout financing, then yeah, your end point is eventually expropriation of assets in a desperate political bid for survival. The likelihood of which rises if the caliber of the political leadership in terms of its commitment to democracy, governance, the rule of law falls. And the risk here is great too, given that living standards will fall through South Africa's, we'll talk about 3 years this afternoon, living standards will deteriorate, and that will create a pool of populism from which populist politicians can extract some support. So yes, ultimately on this track, without correction, you do probably end up in a position of expropriation of things. But even before that, in practice, if medical aid funds face heavy regulatory burden, if empowerment, compliance, equity equivalent provisions, etc., are enforced, these are all as the initial foothills of a move towards expropriation. You must remember that in terms of the mining industry, it's already been through that 20 years ago. Industry is in quite a state today. Water in South Africa has been through that too. But no, I'm afraid that expropriation is probably the way that something like this comes to an end, if in the intervening period, the political system hasn't corrected South Africa's trajectory. And I don't think that that's a far out a possibility. I think next year early, we'll do another one of those briefings for you. We've got political polling trends coming in now that I'll use for that. And I think what those are going to demonstrate, and I'm confident in that because I've read trends like this for many years, is that there is a real prospect now that the economic malaise is going to prompt ANC support levels to dip below 50%. And when that happens, the political system will have served as a means of correcting the policy and economic trajectory that the country's on. And from there, the prospects for real reform do begin to improve. The outlook into the end of this decade does get better. And the outlook into 2030 could actually be pretty good. And that's important to emphasize. I mean, this is a short-term briefing window this afternoon, but I must say the longer-term thing too, partly because of the question we received, Becky, from the gentleman earlier, who said, is it worth investing? I should have added to that, it depends on your time frame. If you're very short-term, then, and you're very involved in the fixed physical economy, domestic earnings, headwinds against you are significant. That changes the picture. If you have a long-term view, much longer-term view, the next decade could offer wonderful opportunities to pick up South African assets at bargain basement prices, if you're willing to invest something in the bet that the electoral system will correct South Africa's present path, and the country could start doing pretty well, actually very well, into the late part of this decade and into the 2030s. Becky, back to you.
We have a raised hand here, Frans. Men would like to ask a question directly to you, and I will allow him to speak. Men, your mic is on mute. Please unmute it. Okay.
Min, your guest Becky is on mute still. If your guest unmutes, we can hear. I think while we're waiting for that,
the mute button. Yeah.
Why don't you go to another one? I don't know if one of my colleagues on the call, Sherwin, if you send a WhatsApp behind the scene, unmute or write the question down, we'll take it that way. Becky, what's next for me?
Next question is, you say it is expected that South Africa will achieve only a third of emerging markets growth averages. How has this relationship looked in the past?
Yeah, it's been where we've been moving under the Zuma era. Well, it depends how far back in the past you want to go. Between, 1994 had those initial years of recovery, and they ran into the Asian crisis, and that sunk South Africa. But from roughly late 98, 99 into 2007-8, South Africa's growth performance was very strong by emerging market norms. We actually, in those years, on a per capita GDP basis, started becoming richer than the average of the world. So our per capita GDP was improving faster than the world average at that time. It was an amazing era into the end of, from that perspective, particularly looking back at the mess that we confront today. Into the era of Mr. Zuma, the aftermath then too of the financial crisis, that was a double whammy. South Africa's growth curve falls very sharply, even as the global economy begins to recover. And in fact, our growth line falls through that global average. World goes up, we go down. That has persisted into the years of Mr. Ramaphosa. So the picture I give you into medium term of a third of the EM norms, that's really the average of where we've been for much of the last decade. Becky.
Okay, Ben actually pressed the hand button by accident. So I'll just go on to the Q&A section. What, if anything, does the recent trade in Southeast Asia mean for South Africa and the shifting balance of power from the west to the east?
Yeah, you're talking about the new trade deal in Southeast Asia, China and much of ASEAN, except for India that stayed out. Well, it's a great geopolitical coup for the Chinese. We wrote that in our note on Monday morning. I think it allows China to develop a growing degree of political leverage over the junior partners in that deal. It gives it the capacity to punish those who are critical of China's political system, events in Hong Kong, etc. And the contradiction between China's multilateral success there and the US walkout of multilateralism under Mr. Trump is, I think, important to take into account, although under Mr. Biden, that return to multilateralism will improve. The point, though, Becky, is we continue to think that great East versus West battle, Chinese diplomats, thinkers, strategists, and perhaps an industrial ethic is vastly superior to what is coming out of the West. And for that reason, the balance of power must slowly continue to gravitate towards the East. Becky.
Yeah, so a question from the audience, shouldn't we be comparing South Africa's outcome, economic and political, with outcomes of other African countries rather than countries in other continents?
Well, it depends. I mean, if you compare it to Africa, we're doing very badly. And in fact, on Southern Africa, South Africa's growth rate is now reducing the regional average. A lot of Africa started to perform a great deal more strongly. What you should compare it to everything. Compare it in Africa, you don't get a better picture at all. You in fact get often a worse picture. What do we? I don't think the CRA believes collectively in anything. What do I think you should compare it to? I think you should compare it to the potential of the country. And there's no doubt that a South Africa that maintains growth rates of 5 to 7% for 20 years is going to become a middle-income, middle-class society. And I think we should always benchmark ourselves against that potential. There's nothing within the country, its resources, infrastructure, the international goodwill towards it. So many of our global clients and diplomat clients are deeply frustrated at the brush off they get from the South African government when they try and help to get the growth rate up. I think it's appropriate to compare South Africa to emerging market growth norms and to say that there is no good reason why South Africa shouldn't be at those norms. That it's at only a third of the norm reflects very poorly on the policy environment within the country. Becky.
We have a question from Anonymous. We haven't seen any retrenchments in governments before during difficult times, with the Emalatini municipality sending out notices to staff that there will be several months in 2021 where there essentially won't be any funds to pay salaries. And with the recent SABC reductions of retrenchment letters, are we likely to see retrenchments in local government as well as other SOEs in 2021?
There might be attempts towards it, but I think it's the wrong thing to do, because what it is, and I think business, which has built organized business in South Africa, has built a lobby to press for retrenchments and wage cuts, and the finance minister at times even entertains the idea as well. We think it's a mistake. If South Africa was in deficit, and if growth was as low as it was, for reasons outside of just plain poor labor market, property rights, empowerment policy decisions, then yeah, you could look at that kind of option perhaps. But it's going to reduce the growth rate. You lose the jobs, you reduce consumption, you stop spending on infrastructure, you put your economy into a long-term downward a competitiveness drift as a consequence. Strategy would make far more sense if the objective was to introduce fundamental structural reform, accept foreign finance bailouts to cover the deficit in the intervening period, or not even foreign finance bailouts, just South Africa's own debt issuance could be paid for by higher rates of economic growth. I think there'll be attempts towards it. I think it's a terribly bad idea. I don't think it takes you to a higher growth future. It can't. But those attempts are going to fail, because civil servants, people facing retrenchment, will organize politically, and the populist majority within the broader tripartite alliance and the EFF will leap to the defense of the people losing their jobs. They will win that battle in the media every time and further discredit the reformers. Strategically, it's a hopeless exercise to try and retrench the civil service to the point that South Africa's deficit is reduced. It doesn't get off the ground. It doesn't even get off the ground. How it can be government policy is alarming. Becky.
Frans, you mentioned some real possibility that if current trends continue, the ANC could lose favor. And if those polls goes against the ANC, where will voters go? Even if they are fairly voted down, will they let go of power? The continent doesn't have a great track record in this regard.
Yeah, I think the ANC will let go of power. I think the infighting by that stage will be pretty pronounced. Polling, I'll do 1 minute, and then we'll pick this issue up again for clients next year and show them the new polls. Show that particularly if you factor in demographics, the voting patterns of younger people, and you begin to factor out voters who are reaching maximum life expectancy. By 2024, the ANC is in a 50-50 race for survival, a political survival. Who does it lose to? It doesn't lose to anyone. Just the collective opposition and white entered away enough of its support to pull its majority to below 50%. I think it leaves power. Everyone, Mr. Trump even leaves power. He's in practice conceded. He hasn't said it, but he's allowed the administration, the agency that does the transfer, to go ahead with the transfer to Mr. Biden. That decision was made this morning. So in the end, if he gives up, everyone will give. I think the ANC will give up as well. Becky.
We have a question from David. What measures can be deployed to curb the rising debt to GDP in which you project could soon surpass 100%?
The only measure is fundamental reform to raise the competitiveness of the economy and draw vast amounts of investment. Short of that, you can finance the deficit with borrowings, with prescription, with expropriation, but you don't get out of the hole, Becky. I see we've got 4 minutes. I'm trying to help you get through all the questions. I'll be quick.
Okay, no problem, sir. And that question that you entered on, do we have any real examples of fundamental reforms that have been taken place to avoid debt crisis?
Yeah, I think you got a raft of successful emerging markets that have been in trouble before. Africa's position was a bit more patchy. One we looked at, we mentioned in the note, the Monday morning note last week or the week before, maybe it was even this week, was India, where the Modi administration, on the back of 9 quarters of declining rates of economic growth, have introduced, at odds with some opinion within India, a cross-section of real structural reforms. Certainly can be done. The present government has the majority to do it if it chooses to exercise that majority. And I leave for last the fact that South Africa has done it. It did it after the transition in 94. GEAR is essentially the package of reforms the country needs now, but with a bit of, had some internal contradictions. Those must be addressed. But under GEAR, the economy grew quite quickly. The number of people with jobs doubled. Investment to GDP levels hit record highs. And the living standards picture in the country improved, and ANC support levels at the peak of GEAR hit their record all-time high point. And anyone who challenges us on we don't mind being challenged, but where you sometimes get the challenge and say, well, was it really fundamental reform that came out of Mandela and Mbeki? Our answer to those comments is a budget surplus. South Africa was running a budget surplus 10 years, 13 years after the ANC came to power. That is the definition of pragmatic, if not deeply conservative, macroeconomic and fiscal management. We've done it once here before. The party that governs the country today did it then. Can absolutely be done. Becky. Are we getting through the questions?
Unfortunately,
tell you,
it
Becky,
appears that
if we don't get to them all, people who've got questions that haven't asked them, you're free to send us a note. And Becky and myself and some of the others will do a quick voice note and send the answer back to you within a week. Becky?
We have a question from Nick. South Africa seems to have a strong civil society with many NGOs consistently litigating against the government every time it tries to infringe on property rights and civil liberties. Will this perhaps be a differing factor in South Africa's descent versus Zimbabwe or Venezuela?
Yeah.
I think it
is. It has been a countervailing force in favor of South Africa's success. I think it has held up the more destructive elements of government policy, and it certainly has bought South Africa time. And if one of our theses is right, that a political realignment will eventually be the window to structural reform in South Africa. Those activists have bought the time for that window to be reached. Becky, do you want to give it 3 or 4
France,
minutes?
unfortunately.
Let's just run
Oh,
3 or 4
3 or 4
minutes
minutes.
over, and then we run.
Okay. South Africa fell deep into junk territory after Moody's investors and Fitch ratings lowered the country's credit rating on Friday last week. Is there any comment on the impact of this?
Yeah, well, it increases the cost of borrowing. So it deepens the hole that the government's in. It was expected, was anticipated. It was an interesting experience for us as analysts, because when some of those agencies were holding on the investment grade rating, we were making the calls that that wasn't justified, reform wouldn't come. We faced quite a lot of pushback and skepticism from business then, from investors, from commentators. Eventually, the agencies buckled to reality. And anyone now who's got doubts about some of the longer term outlook that we've set out this afternoon, we do, and it just happens to be true. We do have a track record where our methods get the long-term calls right, and the basements of junk we're moving through now, something the CRA called quite clearly a couple of years ago. Becky, what's next?
I just have 2 questions that I just need to quickly address myself. One from Angelica asking as to why did we choose the particular countries we chose for the employment rate. This was just to offer a level of comparison with developing economies. Usually middle income societies have around 60% of employment rate. Developing economies have roughly 70% and above, which is what France illustrated in the briefing. Peter, employment similar to 12 years ago, how much has the population risen ever since? Peter, I could, after this briefing, perhaps send you an Excel to essentially show you the trends in the growth in population. We have a question here, particularly on investment, which is something that we do not offer advice to. Your outlook on residential property to let as an investment. What is your opinion on that?
Look, Becky's right. We don't give you investment advice. We're strategic intelligence analysts, and we give a view on the world, and we will answer questions like that. Depends on your horizon, and where in the country you are, of course. Into the short, medium term, you're not going to see much job growth. You're not going to see much productivity growth in the South African economy. Households are going to become further under pressure. I think you're likely to see default levels and so on rise. You might see in the middle classes a little wave, a little trickle, sort of tremor of retrenchments over the next 18 months as companies that had anticipated a strong recovery are disappointed. All manner of risks around there. On the upside, of course, you've got record low interest rates. If you lock those in now, you might profit handsomely. If you were a firm with a terribly long-term view of the world, and you were gearing for South Africa's next 10, 20 years, as the South African economic crisis deepens, you will be confronted with more and more opportunities to pick up assets that later will deliver spectacular returns. But if you were now, if it was your sole income and your sole capital, you wanted to buy something to rent, I'd be rather cautious about that. I imagine you might pick up something to buy for a little bit less down the line as the South African crisis deepens. Becky?
We have a question from Ian. In times of world crisis, the crisis often spurs reform in leadership. Why is this not happening in South Africa?
The reason twofold: corruption and ideology. We've done an estimate. The ANC is run by an executive committee. It's got 80 ordinary members. Our own analysis suggests that 41 of the 80 are implicated in allegations of extraordinary corruption, which means they could go to prison. So inbuilt into the structure, the rot has deepened to such an extent through the years of Mr. Zuma that within the leadership structure of the ANC itself, there's an inbuilt immunity to reform on the question of governance. If the way was open to mass prosecutions, the people opening the way might be the first to be prosecuted. That's the first reason why governance doesn't improve. The people who will make those decisions are afraid of the consequences of South Africa being a cleanly governed society. Second reason related to it is ideological, that there's a strong ideological aversion to the reforms that are necessary to position South Africa as a more competitive economy. In fact, real reformers, I'm not going to name them, I qualify my endorsement of them in any event, are very, very few and far between. I said to a client this morning, there will be no reform because there are no reformers to introduce reforms. And we think that's going to hold true, and the reason for it is ideological. So the pressure can build politically, the pressure can build economically. Whether that will have to overcome enormous ideological and corruption inertia before it triggers a fundamental reformation. I also don't think that you can only get the ideology right and leave the governance question unresolved. Large Western, particularly corporations, cannot take the risk of committing to a society where they're going to be exposed to malfeasance, because the reputational and other risks are simply too great for them. So that's the answer to that question. Becky?
We have one last question, and it comes from James. If you compare returns to simply moving funds to, say, X dollars, then you need to generate an unrealistic return to achieve parity. James, would you like me to unmute? I think this was in link to the question you asked to Frans before. Would you like to ask directly this question to Frans if I unmute your mic?
James, go ahead.
Can you hear me, Frans?
Very well.
Frans, I've been following you for a while, as you know, and the Centre for Risk Analysis, and you always put forward scenarios. This time I've never heard you so certain of the way forward. We invest in a variety of things. We're obviously investments that are already there. We would leave in place, but we look at new investments. We're a small boutique private equity house. And basically on the back of what you've said, if we assume an investment horizon of 2 to 5 years, and you look at for example, the Argentinian peso against the Rand, there is going to be such significant devaluation of the Rand, which is almost a certainty. It's just a question of where the time frame lies, that there's hardly an investment that we would look at in South Africa which would meet the hurdle returns, which we would be able to achieve just simply by converting rands into dollars and waiting for the devaluation to occur. So, two questions, I guess. One is, you seem to have got to a point where there really aren't any other scenarios. There's just this inevitable demise of the South African economy and currency, and it's really just a question of when it's going to happen.
Tough question, James. Nice one to end with. Let me do my best. I'm pretty certain on the 2 to 3 year view that we gave you this afternoon. I'm pretty certain on growth that we've given you the best case. Debt, the deficit, I think we've given you the best case as well. On the currency, it's a question of the timing. On current trajectory, inevitably a very sharp weakening must play out, particularly if there's a catalyst outside of South Africa to prompt that, such as interest rates in the West taking off or something of that nature. The question is when will that happen? I can sustain the case for you that it might not happen before the political realignment that we speak of plays out, and that would be the 2024 election. It's possible that South Africa might borrow more, might lean on domestic savings, etc., without getting into the default position that triggers that great, rush out of the Rand. So whether that will inevitably happen before the politics changes, I would have scenarios on that. And I wouldn't be certain that it will happen before the politics brings an end to the current era and we start a new era after that. And that's the crux of your question. Because anything you commit to now, if that extent of valuation, as we saw in the peso, plays out, of course, leaves you dead in the water. The difference is, though, our exposure to foreign debt is not at the same level as Argentina's was, number one. Second, there's going to be a reluctance to borrow foreign borrowings here for the lifespan of the present administration. And therefore, it could be the case that while I think the currency comes back a little bit into the next 12 months, begins to weaken thereafter, the politics might bring an end to the crisis before the crisis sees the peso-style devaluation in the South African currency. So there I'd be a bit more qualified. I can't make a call on the exact timing of what that would be, but our other calls into 3 years, debt, deficit, growth, I'm very confident on those. After the political realignment has played out, that's where our scenarios really come into play. And that takes our view into 10 years and into the 2030s. And we see strong upsides for South Africa then. The trick on the country, of course, is going to be not to suffer such horrendous losses when that steep reversal comes that you're completely unable to take advantage of the upsides. That's the best I can do to answer your question. And the emphasis is, without political intervention via an election, I think the currency blowout will happen in South Africa. I'm not sure when that intervention, when the election event and that blowout, how the dates are going to align, which one comes first. And that's how I'll end for you this afternoon. Tough question, Becky. Thank you, Becky. Thank you to all the guests. Thanks to my colleagues, David and Sherwin. I'm doing one more event with you, I think, before the end of the year. It's a sort of typical Q&A. You can throw some of these tough ones at me again. I hope you have a great week. Anything you need, let us know. And from me for this afternoon, goodbye. I leave it to Becky to close off for this afternoon. Thanks, Becky.
Thank you, Frans. And to the audience, please be on the alert that a macro review based on what Frans has illustrated in this briefing will be published soon after this briefing. And please do enjoy the rest of your day. Thank you so much for joining us this afternoon.